Welcome to Fibocan's YouTube channel. You have done the right decision in your life by coming into Fibocan's YouTube channel. Who is Fibocan? Fibocan is a wealth enabler. How do we enable wealth? We enable wealth through training, coaching, mentoring, enabling students, investors to devise their own investment strategies through our comprehensive training programs and innovative investment strategies. So what do? We have published educational videos 1 to 16, module 1 to 16 in English and Tamil. The modules that start from basics of banking, capital market, investments, how to do investment, technical analysis, options, futures, then strategies of options and futures, and finally income tax on derivatives. To begin with, all these 16 modules are available both in English and Tamil. I would request you to go and select the appropriate playlist and watch all the videos and put your comments. So that is the step one. Every day we put videos about market commentaries. Please understand that we are not SEBI registered. Hence, we cannot give any recommendations. We will say whether it is looking good, technically sound, technically weak, has to be cautious. These kind of things we will give, but we will not give any price targets, or we will not give any stock recommendations. Only thing is that we are here to give technical education, imparting technical knowledge to anyone and everyone through our free educational videos, which we put every day on the daily markets, and during weekends we put about global markets. So I would request and encourage anyone in the age group of 17, 18, those who are studying in HSC, higher secondary or plus 2, to watch module 1 to 4, definitely either in English or Tamil, whichever language you understand out of these two languages. And anybody who is doing BA, BCom should watch up to module 8. And those who are doing MBA, CA, CFA or any professional or postgraduates should watch up to module 15. And for professional traders, it is ideally suited for them to watch module 16. I am sure that you will enjoy watching and enhancing your knowledge. Thank you very much. Today is February 26, 2024, Monday. First the levels, then we go into the technical discussion. Nifty closed at 2619.70, 0.28% down. BankNifty 46811.75, 0.5% down. Nifty 122.05. Nifty more or less at the same level. Okay. So what candle it formed? Nifty formed, Nifty and BankNifty formed inverted hammer candle. So inverted hammer generally key support levels, if it forms, can be kind of constituted as a support. But because the trend has just started, the downtrend has just started, because it opened the gap down today, and Nifty could not even today's when it forms a inverted hammer, obviously the upper wick is very high. The upper wick could not anywhere go near the 50-day simple moving average as far as Nifty is concerned. As far as BankNifty is concerned, at some stage it was above the 50-day simple moving average, which means during the course of the day it was staying above, but during the end of the day or during afternoon onwards, it started coming down, and finally it formed an inverted hammer. So now the 50-day simple moving average is going to act as a very strong resistance for both Nifty and BankNifty. And also above which, around the same level, slightly above, is the Bollinger upper band for these two indices. Hence, that will act as a resistance in the short-term basis. However, what the candles are indicating to us is it is forming a kind of a sideways with little downward bias. That is what it is. However, the big breakdown can happen only if it breaks below the Bollinger 20-day exponential moving average and Bollinger middle band, so which is slightly below. So hence, these are the levels within which it's going to operate. So today's candle is very important. As far as Nifty is concerned, it also opened the gap down, but it formed a spinning top type or more of a red candle with a slightly long lower leg. So, but Nifty, there is a chance that tomorrow there can be a rising three methods, hence there can be a short covering rally. That is also possible. You cannot rule out. But when I analyze the underlying stocks, we'll go to the indices. That time we will discuss underlying stocks. I'm not seeing enough strength in many of the stocks, which is giving slightly which is slightly a cause for concern. Hence, one has to be careful, because next 3 days, fortunately or unfortunately, this month is the monthly expiry, and also the what you call month end falls on the same day. Hence, no, there will be extreme volatility in the next 3 days. Hence, amateur traders has to be extremely careful, and even the professional traders, many call themselves professionals, but they are not professionals. Just because they are trading for a long time doesn't mean they are professionals. Okay, just because somebody is aged doesn't mean they are intelligent or wise. Is the same logic applies here also. So, notwithstanding that, let's go into the analysis part of it. Bank Nifty, Axis Bank, Federal, ICICI, Indus fell 1%, AU fell 2%, Bandhan and Yes Bank fell 3%, IDFC, First Bank moved up by 1%. So HDFC remained flat today, but what happened? HDFC could not go above the 20-day exponential moving average, which is acting as a tough resistance for it. The one point which we have to note here, I want to stress here, why? Because I want to stress here is on HDFC Bank. Why? Because it has relevance not only for FinNifty and Bank Nifty, but also for Nifty. So what is it? Bank Nifty, HDFC Bank is hovering around the 50-month simple moving average. What is it? 50-month, not 50-day or 50-week. 50-month. It went below that last week. Now today it has slightly closed above. Unless otherwise it decisively goes above that and stays, there is weakness, going to be weakness in HDFC Bank, which in turn will result in weakness in FinNifty, Bank Nifty and Nifty. However, what I find is that probably this month, the next 3 days, if it manages to somehow escape, go above that, hold that 50-month moving average, probably next month there can be some short covering coming in. But that doesn't mean HDFC Bank is safe. Once again, bears will make a counter attack and try to push it below the 50-month moving average, simple moving average, decisively. If that happens, forget about any appreciation in any of these indices. So unfortunately, many fundamental analysts, they have to qualify themselves, whether they are fundamental or technical. They'll come and say, oh, it looks attractive. Nothing is attractive. Just please look at the technicals. The 50-month moving average, if it breaks that decisively, then there is going to be a significant fall. If it decisively goes above and stays above, and there will be another attempt which will be made by bears to push it below that. That time also, if it holds, then we can say that HDFC Bank is kind of some sort of support is available. Anyway, that is having a significant importance in all these indices. Hence, I am stressing that point. As far as financials are concerned, Bajaj Finance, M&M Finance, Manappuram and Muthoot 1% down, Jio 2% down. Shriram was the sole performer, moving up by 1%. Insurance and cards, HDFC Life and SBI cards 1% down, LIC 2% down, ICICI General and SBI Life 1% up. Oil and Telecom, Bharti 1% down. IT, Apple, HCL Tech, Infi, LTIM, TCS, Wipro 1% down, Intellect 3% up. Consumer goods, Berger, Britannia, ITC, Pidilite, Trent 1% down, Titan 2% down, Asian Paints 4% down, PVR 1% up. Here I want to touch upon Asian Paints. Last year also we have been telling that technically it is not looking good, but during the fag end it made some short covering rally and closed positively. But that doesn't mean that like it is on an uptrend. So the kind of candle that it has formed today, 4% down, if it goes below the last year's low, forget any appreciation, not only for this year, even for the next year also. Because if it breaks below last year's low, there will be further fall that will be coming in Asian Paints. Hence, one has to be extremely careful. These are the levels I am telling. I am not saying that it will go down or go up. I am saying that these are the levels one has to watch. Because I am not SEBI registered, I can't give any price targets. I am just telling the key levels one has to watch for. That is in the public domain. Automobiles, Escorts and Maruti 1% down, Eicher 1% up, TVS Motor 2% up, Bharat Forge 4% up. Metals, JSW, National Aluminium, Vedanta Coal 1% down, Jindal, Hindalco, Tata Steel 2% down, SAIL 3% down. Health and Pharma, Lalpath 1% down, Divi's 2% down, Apollo Hospitals and Metro 3% down, Metropolis 3% down, Thyrocare 2% up. In the others category, Jubilant Food and Ultratech 1% down, Adani Ports 1% up, L&T, Adani Enterprise and Delta Corp 2% up. So, what is the level that FinNifty one can think of? See, it's operating with a sideways bias slightly going down. Hence, no, any short covering, sudden short covering can take it up near the Bollinger upper band. So hence the daily Bollinger upper band is something which might act as a resistance. And on the downward side, the Bollinger middle band should not be broken. So hence, like, the level to watch is Bollinger upper band on the upward side and Bollinger middle band on the downward side. Thank you very much.